the recent run in Bitcoin, to me, it's not so much about the ETF anymore. That's out there. I think there's still a lot of hype about it. It's partially about the halving coming up, but it's also about money. I do believe that we'll get down to that 3% handle, and then getting from 3 to 2 is always the toughest thing. If you look at the 10-year yield, right, the 10-year yield, the Fed funds rate's still at 5.25 to 5.5.
Gareth will delve into several topics in this interview. He will discuss how the launch of the Bitcoin ETF and the surrounding hype impacted the price of Bitcoin. Additionally, he will explain why he took a short position on Bitcoin when it reached the upper boundary of a channel pattern on the chart. Gareth will also analyze how the recent surge in Bitcoin was fueled by money flowing into risk assets like the stock market and the tech sector, expressing concerns about the resulting frothiness in the system and social media behavior. Furthermore, Gareth will draw parallels between the current inflation situation and the 1970s, using charts to illustrate the cycles of inflation and interest rates. He will also shed light on how the Federal Reserve's balance sheet and the U.S. deficit are influencing the inflation outlook. Join Gareth in this interview as he provides insights on these topics and more. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Sure. So we had the ETF launch, and that hype, again, hype is hype, whether it's in Bitcoin, whether it's in NVIDIA, whether it's in any of these things, it drives it to these crazy levels, overbought, and then you get kind of the sell the news event. And that's exactly what we saw in that. I happened to be short at that time. We got out just around this, just below 39,000 down here. And the beautiful thing about this is it created this, look at this channel. You have the highs here connected to these highs and this low connected to these lows. And look at what we just hit on Bitcoin. So believe it or not, I initiated a new short just up here, very small position, just to kind of a dipping the toe in the water type thing. But again, the idea being is we'll see a pullback off of this. And now the recent run in Bitcoin, to me, it's not so much about the ETF anymore. That's out there. I think there's still a lot of hype about it. It's partially about the halving coming up, but it's also about money, right? It's about risk assets. When you see SMCI going up hundreds of percentage points in a couple of weeks, when you see NVIDIA doing what it's doing and the tech sector doing what it's doing, money is going to find other risk assets to participate. And I think that's what's driven up Bitcoin recently. Now, is there fundamental long-term reasons to be long Bitcoin? Absolutely. But again, my thesis is that if we see a 20-30% correction in Bitcoin, in the stock market, which would be kind of run-of-your-mill after the Nasdaq's up, 60% since October of 2022, you then have to talk about Bitcoin possibly coming back to 30 to 32,000 on the charts.
Well, wait a minute. So same question as the S&P, right? Just fundamentally, basically speaking, someone's looking at that chart and says to you, it's obvious we're in a bull rally, or it has been in a bull rally. How can you still be bearish? How would you respond to that?
Well, I think the kicker is this, right? Is that I'm a trader, so number one. So again, right here, I have a trend line. I short it. I buy support. If it comes down to the lower level, we'll buy support as well. But I think my point is this, is that when you look at the kind of the froth in the system, and right. Remember what I said earlier in this interview, folks, it's one of the biggest calls I'm known for of nailing the Bitcoin top at 69,000 is that when I see social media behaving like it is behaving, it is exactly like that in stocks, not so much in crypto, but in stocks in particular, as those same indicators back then. And that is a warning sign of, the people saying, hey, you could just close your eyes and throw a dart at a dartboard and you'll get a winning stock and you'll make money. And that's a concern to me. So I do think we're kind of coming into a risk-off environment. How big of a pullback? I don't know. But I do think on that, Bitcoin will just sell off just naturally as a risk asset.
Okay, so when there's a lot of hype, generally that's when things get frothy. Be prepared to sell. Can the reverse be applied? So I'll give you an example. Last year, you and I both attended the Bitcoin Miami conference. Attendance was slow. I think that may even be an understatement. It was a very quiet conference. Not a lot of people there. Not a lot of exhibitors there either compared to the previous year. When you look at a situation like that, do you think it's time to buy?
Yeah. Absolutely. They, again, I wouldn't call it blood in the streets back then, but that's the idea, right? When there's blood in the streets, you buy. When the pizza guy is telling you the next stock tip, that's when you're supposed to sell, right? That's the old Wall Street adage. And it's very, very true, is that, you have fundamentally something like Bitcoin 21 million will only be in existence. So longer term, I think it performs really, really well. But again, for me, I look at shorter term timeframes, and right now we're kind of in the frothy zone, mainly on the stock market. But I think with the stock market pulling back, Bitcoin likely would get a pullback here as well.
Do you think Bitcoin will reach its previous all-time high before a pullback?
I don't think so. I personally don't think so. I think that there's so much money that got burned in 2021 that unless this stock market continues up for another 10 to 20%, then probably we don't do that. And I don't think the stock market has another 10 to 20% before a bigger corrective move of at least 10% to the downside here. Now, again, I will be a buyer. Right now, my major line in the sand is that 30 to 32,000 level. So if we can retrace there, I'll start accumulating pretty heavily on the Bitcoin chart.
The CEO of Sound Planning Group has forecasted a significant surge in the price of Bitcoin, suggesting that the cryptocurrency is poised for a substantial rally. He pointed to the upcoming Bitcoin halving and the adoption of spot Bitcoin exchange-traded funds as pivotal factors driving his bullish outlook for the cryptocurrency's price. The financial advisor asserts that Bitcoin represents a genuine asset class with considerable value. BlackRock, the world's largest asset manager, has accumulated nearly 110,000 Bitcoins for its spot Bitcoin ETF, known as the Bitcoin Trust IBIT, since its launch about a month ago. This ETF has witnessed total net inflows of nearly $5 billion, leading the pack among all spot Bitcoin ETFs. BlackRock CEO Larry Fink has publicly declared himself to be a firm believer in Bitcoin. Furthermore, a Federal Reserve governor has addressed the impact of cryptocurrencies on the dominance of the US dollar, expressing reservations about the necessity of a US central bank digital currency. He also voiced opposition to banks adopting Bitcoin exchange-traded funds as their primary asset.
I do believe that we'll get down to that 3% handle, and then getting from 3 to 2 is always the toughest thing. And I continue to see the reminiscences of what happened in the 1970s. And in fact, I can show my chart right here, and we can just kind of take a look at it. But basically what we see here is this was the 1970s, and you had that initial uptick, and then the Fed obviously kind of stepped aside, and inflation came down. And then we had another wave of inflation went higher. The same thing pulled back. We had another wave higher as well. And then finally it got back under control. And I really think that, as much as the Fed has said they don't want to repeat what Volcker did, if you look at the 10-year yield, right, the 10-year yield, the Fed funds rate's still at 5.25 to 5.5, yet interest rates on the 10-year are back to the 4-ish% level. In fact, we were below 4. So you've seen those interest rates come back down even without the Fed lowering rates. And what that does is it starts to initiate inflation again. It starts to kickstart that inflation because borrowing money is getting cheaper again. And I think you have to look at many things, right? So just a couple things I want to point out is that, you've seen the balance sheet of the Federal Reserve drop just a little bit. It was $9 trillion. It's down to $7.5 trillion. So the Fed has kind of started to contract that a little bit. But the kicker is if you look at all these auto loans, credit card debt, U.S. public debt, they're all surging to the upside. And so that's making up tenfold the amount of the pullback in the balance sheet. And again, just to show you in comparison, this is the pullback here, right? This is where we were. We were trading around $9 trillion. They've only been able to reduce their balance sheet to about $7.5 trillion. And that's while the U.S. deficit has risen multiples of that over just the couple years, right? So again, my point being is that when it comes down to it, you're in a scenario where the Fed, they've tried to tighten, but the market has actually loosened. And then you talk about the extra money in the system from credit card debt to auto loans to the U.S. deficit. And it really hasn't been that tight. And I think that's probably why the stock market is at all-time highs as well.
For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.